Good evening and welcome to yet another edition of Money Control Masterclass. We are discussing a topic that's intrigued us, that's shocked many people in the last week, the mega crypto crash. Why the crash and what's next? To really dissect all this, we have a very special panel of guests. We have Darshan, Bhatija, Gaurav, Dahake, Sidharth, Sogani, Kashif, Raza, as well as Tanvi Ratna joining us on Money Control Masterclass. Thank you all very much for joining us on the show. The last week hasn't been easy at all, for people in the crypto universe. And there are, of course, a lot of skeptics, critics who are taking the opportunity to say, I told you so. But in fact, Morgan Stanley has put out a report saying that, last week was perhaps the most volatile in the history of cryptocurrencies. And we've seen multiple crashes in the last decade. For various reasons, cryptos are in the spotlight, but last week was bad, even by those standards. Let's dive in and find out, why this happened and what's next. I think we're still waiting to get Darshan and Gaurav on the show, but okay, is Darshan there? Darshan's here. Okay. So maybe I can get Darshan and Gaurav's view first before I move on to the others. Various reasons being cited for the crash, from US Fed to inflation to the sentiment in the listed markets. What's your own sense of what happened and how long this is going to last? Darshan, you want to go first?
Sure, I'm happy to. Firstly, thanks so much for having me on the show. With regards to everything happening in the broader economy and it being tied back to the crypto space, I think over the last 2 years or so, we've aggressively stimulated the US economy and then in turn everything else associated with the US dollar. If you look at total circulating capital, over 25% of the all outstanding US dollars was created since COVID and over 70% since the last 12 years. So that stimulation was really driven up to 11 to ensure that we are not feeling the economic downturn that was associated with COVID. And all of that capital trickled into the capital markets, which saw asset prices reach all-time highs across the board, including cryptocurrencies. Now that we saw inflation, especially in the Western markets, go rampant because of stimulation, the Federal Reserve decided to dial that down a bit and raise interest rates. And we think we're going to see growth stocks and everything associated with high risk, cryptocurrencies included, go through a correction associated with that. So even if you look at public companies such as Coinbase, they're trading at between 3 to 4x their on their PE ratio, which is unheard of for a growth company. They have $6 billion in cash and they're trading at $12 billion in market cap. So we're just seeing growth stocks being hammered because of the change in sentiment in the broader markets, and that's trickled down into the crypto space. And of course, over the last 10 days or so, we've seen an algorithmic stablecoin and a significant ecosystem collapse because of a potential run on that. And both of those effects have led to the crypto space being pretty down from its all-time highs.
Right. I'm just going to come to some of what you mentioned in terms of the stable coin as well as Coinbase. In fact, we reported just an hour ago that Coinbase is dialing down its global hiring plans. They had plans to triple headcount, but they are now scaling that down, and that's obviously going to have an impact on India as well. Because Coinbase originally said they wanted to hire, I think, 1,000 people in India this year. With global plans also off, I'm sure that India plans are also going to be off. We've already had trouble with the RBI with respect to UPI payments. I don't know how that's going to happen. Gaurav, what's your own take? I mean, crypto, we spoke to Nitin Kamath of Zerodha. He said crypto was sold as an asset class. It's an alternative to the financial markets that's delinked from the financial markets that will only go up. But that's clearly not the case.
Right. So crypto as an asset class, of course, will not only sort of go up, it will have its sort of own volatility and sort of move on both sides larger than the normal stocks, because as an asset class it is younger, it is about 12, 13 years old as compared to equities which is like hundreds of years old. So as asset classes mature, the volatility sort of decreases. What we are also seeing is, as Darshan mentioned, quantitative tightening is happening for the first time in the history of financial markets on a prolonged sort of a timeline. And as quantitative tightening happens, there is actually where Fed actually was the last buyer of the resorts. When any time the markets used to sort of go down, Fed used to sort of come in and inject liquidity into the ecosystem. That is going to be the reverse way around now. Fed is going to actively sell their debts to the general public, and people are going to be the buyers of the last resort. So this has never happened, and most of the fund managers, portfolio managers, have never seen this sort of a market cycle. This is going to impact, as we are seeing, equities. A lot of the equity stocks are also 80-90% down. Cryptos, of course, are significantly down as well. We'll be seeing a lot of that, but you need to sort of understand when the markets bounce back and things sort of start course correcting again, cryptos would bounce much further up as compared to equities, because there is usually a larger volatility priced in on both sides of the spectrum. So there would be interesting opportunities that would sort of come in for people to sort of get crypto at much lower prices from here. And if some of them sort of tap into it when the markets sort of consolidate and regain momentum, I think we're going to see a much larger upside there.
So Gaurav is basically saying buy the dip and then hold on for dear life. Even in such a scenario, I'm not sure how many people are going to take that. But Siddharth, can you weigh in as well? Crypto was, pegged as this asset that was completely delinked from the traditional economy, from traditional finance.
Hello.
I think Chandra, we lost your voice. So if you can just
Yeah.
ask the question.
Yeah. So that I was just saying that
Hmm.
Gaurav is sort of asking us to, buy the dip and hold on to dear life. In this scenario, I'm not sure if that strategy will fly. But what's your take? Because crypto was always pegged as this asset class that's delinked from the others, and it has nothing to do with traditional economy from the traditional markets. But clearly, everything is
Hmm.
interlinked.
Yes, that's a good question, and thanks for having me on the show. Yes, fundamentally, crypto is delinked, and it's a non-correlated asset. That means, it doesn't follow any sovereign. It is totally decentralized, and stuff like that. But in the current scenario, when, this is technically crypto's first recession after it has become a considerable asset size. Now, when a recession comes, usually the price action impacts the entire sentiment, because eventually the users for crypto and commodities and stocks all are, or it's consists of all of us, right? So when there is a panic in the market, everything goes down. So in a short term price action, crypto prices are falling, and of course, the war situation, the reverse QE. I mean, we all anticipated this. The forward spread was getting negative. The yield is, on the verge of going negative as well. So we all anticipated that this recession will come in, and along with that, even crypto works in an 18-month cycle. As far as I have seen in the last 7 years of my career in crypto, it usually moves in an 18-month cycle. That means every 1.5 years you will see a bear market, a sideways movement, a higher high, and again, a correction. So we were anticipating this. Bitcoin had faced solid resistance at around 45 $1,000, and it couldn't go above that, and it corrected, and then the war triggered, and the Fed started announcing the QE, reverse QE, right? So, but there is a lot of more action to be expected, because the Federal Reserve has not yet started adjusting their balance sheets. So I mean, I would say that crypto for the short term it's going to be a little more sideways, but in the next cycle it is going to make a new high. Hello.
Um, yeah, Sidharth,
Yes.
Sidharth, just one follow-up question. I'm sorry, I lost connection briefly in between. Can you also give us a sense of the data? I remember we reached out to you last month when the tax came into effect in India, the 30% tax, and we saw exchanges volumes already plunging. In light of this crash that we've seen in the last week, what impact has it had on volumes? Can you give us some India-specific data on this in terms of what you're seeing as far as the exchange data is concerned?
Well, after the tax, I mean, just before the taxes were announced, I mean, in the last week of March, we saw, higher volumes in the exchanges. A lot of people cashed out because they were anticipating some kind of taxes in the coming budget. So a lot of people cashed out in the last week of March, and from the first March, I mean, the first few days were holidays, but we were thinking that due to holidays it is going like that. But in the first 7 to 8, days, the volumes fell down sharply by I think 70-75%, which was not expected by anyone. That was a complete dip, and uh, and it continued. In fact, it continued. A lot of liquidity providers to the exchanges, they were contemplating whether to go ahead or not with the liquidity provisions. Also, new investments were not coming up. I mean, the market sentiment also kind of contributed to it, because the market wasn't going up, or it wasn't. People were not, bullish on the entire space at that point of time. So it kept falling down, and then recently we got this news of this 28% GST, which is, I mean, the entire industry is right now in shackles. New investment is not coming in. Exchanges are running dry. So it's in a bad shape as of now.
Right. It's actually a very somber. Okay, so Siddharth, Tanvi, if you can wait on this before I go to Kashif, Siddharth kind of listed out all the things that can possibly go wrong right now in terms of a triple whammy of sorts, the tax and then the TDS and then the GST, and then there's an overall crash, and there is actually no certainty on what the government plans to do.
Chandra, I think we have lost your voice once again. If you can repeat the question.
No, not
Still not
audible.
audible.
Hear me now?
Yes.
This is better. I'm sorry. Yeah, Tanvi, I was just asking you, what can we expect from a regulatory policy landscape? Because clearly, I mean, crypto investors are already suffering, and I think there's a triple whammy of sorts for Indian investors because they also have to contend with a tax and then a TDS, and now there are fears of a GST. Is the government kind of just waiting for the industry to die a natural death without any intervention, without any policy? Tanvi, you're on mute.
Can you hear me now?
Yes, yes, it's much better.
Okay. Yeah, so I can't really speak for the government. I think there's clearly a lot of moving parts there. But I think in terms of this whole incident, which is what you had told me, that in terms of regulatory implications of this, I think you're definitely seeing the winds of that starting, right? And there's been a lot of eyes on stable coins for quite some time, and I think amidst US regulators there have been a lot of efforts already. We had this precedence working group that came out with a report not too long back. We've had already 2 3 versions of legislations that have been tabled. So I think and if you watched the hearings that happened in the US Senate just a few days ago with Janet Yellen. I mean, it's surprising how much of that hearing focused on cryptocurrency, and how much specific mention there was of this UST and Luna incident, right? So I think definitely, it has got a lot of high level attention, and I think within this year is the expectation that there will be now regulation on stablecoins from the US Congress. And I think that will change many things fundamentally. So this year was already anticipated to be fairly heavy on regulation from a variety of fronts, whether it's the SEC or the Indian government, or other governments. But I think at the moment you're seeing a little more acceleration of that after these events.
Right. Tanvi, can you hear me? A follow-up question for you.
Yeah, sure.
I also wanted to understand, in light of what we are seeing. I mean, we've been carrying stories on Money Control on how people actually borrowed money and then they lost that by investing in cryptos. Do you think it will make the central bank, the government, a little more cautious and averse in the way they approach crypto regulation? Will it perhaps justify what they've done so far?
Yeah, I mean, you can go over the events yourself and take a call. It's not going to make people very bullish on things, that's for sure. So I think in terms of the risk assessment of this, I think that this was a very big crash, right? And you had almost a 80 billion ecosystem built on top of this whole stable coin, and it was one of the biggest algorithmic stable coin experiments. So I think the implications this will have for DeFi, the implications it'll have for decentralization, these are quite big. And I think once stable coins come under some sort of treasury or Federal Reserve oversight, that will change many dynamics. So I have a specific column on this in my CoinDesk column, but I think the minute you see this sort of clear dollarization in stable coins, that is going to create a lot of other geopolitical sort of dynamics, and those are already high in the post-war era. So crypto is not in isolation. There's a lot of things going on monetarily in the world, right? And I think this just becomes another theater for that kind of activity. So I definitely think the world's already on edge, and I think events like this will sort of could expedite that. Can't hear you.
Can't hear you. Not yet.
Is it better?
Not yet. Yeah, it's better now.
Okay. No, I was just saying for all our viewers logged in, we are live with our panel. So if you have any questions on the crypto crash and what's next, send them in. But Kashif, thank you for coming in on the show as well. You've seen multiple cycles like this, and Sidharth was just saying that cryptos operate in 18-month cycles. So every 18 months you will see a bear market. But it just seems so intense and extreme this time. I'm not sure if that's because of the larger number of users coming in, or if
Hmm.
it's because it's become mainstream in India this time around. What is your own sense? How you sort of gauging the crash this time compared to the previous ones, the 2018 one, for instance?
So first of all, thank you for inviting me, Chandra. This time around, it lot of things actually they came together. So earlier, what used to happen, corrections are a normal, this thing. Let's say, suppose in stocks also, in crypto also, in any investment, class, when you invest, there are these cycles. You have, bull cycles, and then you have bear cycles. So nothing new. People who are already in crypto, they know about it, that there are going to be times like this. The most important part at this very moment, what happened was the timing of so many things. So first of all, we know that the Federal Reserves, right, when they took an option of increasing the rates, right, I think that was something that was expected, because the way inflation has been growing around the world, especially in US, so this was a worrying thing for US, and they wanted to bring down this inflation, so they actually went for a rate hike. And when they went for a rate hike, obviously, the liquidity which was there in the market, that definitely that will get squeezed, that will get wiped out from the markets. We know that, in comparison to stock market, crypto markets are still very, new, and the number of people in crypto are still very less. And those financial institutions today, who didn't existed earlier, now those financial institutions are invested in stocks also, and they are also invested in crypto, and they follow the same strategy when they are supposed to deal with these speculative assets, like in this case crypto. So whenever the uncertain times they come up, they move out of the market, right? So that's what we have seen, that financial institutions moving out of the crypto market. And similarly, because of the Fed thing, the market overall got a very bearish sentiment. This was expected, actually, because once we had seen that market got pumped earlier in 2020-21, when we saw that governments were printing money. So we all, in fact, people who were there in crypto will agree to this, that they enjoyed that thing, because when the money was getting printed and money was getting pumped into the market, Bitcoin actually went to 70,000 US dollar. The whole market actually went up, and the moment liquidity went out, the market is going down. But right now, the biggest thing that has happened is of the algorithmic stable coin fallout, and that is Luna. Just imagine, Chandra, that today, UST was this entire fiasco was more than 70-80 billion US dollar. And now Lehman Brother crisis was close to 65 billion US dollar. And even today, if I have to give you a number, uh, like Honda car manufacturing company is worth 40-45 billion US dollar. So just imagine the magnitude of the fallout, and that too in 7-8 days, right? And we all know that from 7th of May, Luna Foundation had 80,000 bitcoins in their reserves, and today, after 10 days, they have sold 80,000 bitcoins in the market. So because of all these things, and now we also expect that regulations are going to come in, because UK has already announced that they are coming up with regulations. Janet Yellen has also announced that the US will come into this regulatory space sooner or later in stable coins. And India is definitely watching this thing. So Luna thing, as the timing is such, that it has aggravated things a lot. So I think this bearish trend will continue to remain, I think, in for some time now, I think.
Interesting thoughts there, Kashif. In fact, I was just reading a tweet by Bill Ackman where he said, the entire Terra project seemed like a pyramid scheme because the rise in the tokens was dependent on new investors coming in, and when there was a supply rush, the whole thing just crashed. So I guess everyone has the benefit of hindsight. But Gaurav, finally, good to see your frame getting restored. I'll just come to you, but I have a question for Darshan. Darshan, it's also interesting the way investors are viewing this crash. And, I mean, between the new investors, the believers, and the slightly older people who saw crypto as an investment avenue. So if you look at the slightly older people, they are very concerned, they want to pull back. But if you look at the newer lot, the Gen Zs, believe in this world, who believe in Web3, they think it's a transient trend. So again, are you seeing that difference as well in the way people approach or view this crash? Like there are the believers, and then there were people just waiting for something to kind of turn negative.
So I'm not sure how much the broader market has context towards our customer base, but we don't service, I would say, very active retail investors. We, however, go after the high net worth passive investor. So these are not folks who actively trade in the crypto markets. They're typically sitting on larger sums of capital and they're more patient. They're looking for medium to long term returns and they're not typically speculating in the asset class. So if you invested during the bull market, your average buy price would be between 45 to maybe $55,000. And if you sell, if you're looking to sell now because the markets are down, you would book anywhere between a 30 to 40% loss. And that behavior around buying during exuberant times and selling during bear markets is classically attributed towards first time or retail investors that don't typically have long term investment horizons. And that's just not our persona. Um, when what we're seeing is people doubling down and in turn accumulating further assets to bring down their weighted average cost of each of these asset classes in the hopes of potentially selling it during the next bull run. We're not seeing panic selling on from our customer base to a very significant extent. Of course, now given that everything that's happening with the Luna ecosystem, we did see some speculation around that asset, but outside of that, people are accumulating Bitcoin and Ethereum.
What trends are you seeing, Gaurav, in the way, in how people are reacting, how users are reacting?
Right. So, fairly interesting trend in the younger sort of audience. So, what we call a Gen Z. So, post 95 born sort of folks. We we have seen a lot more sort of brash confidence in the way they approach investing versus people sort of the millennial sort of investors that are out there. So, as Darshan was pointing out, Darshan has a lot more sort of passive, high net worth sort of individuals. So, those are millennials, post or Gen X sort of people that they sort of serve. We serve both sort of people, and what we have seen is the Gen Zs are a lot more sort of speculative in the way they want to sort of approach their investing style versus the millennials, which are more structured in the way they want to invest. So typically resorting to something like an SIP or systematically investing, keeping the investment towards a certain set of tokens, as in the top 10, 15 tokens, and so on and so forth, versus the Gen Z, which is trying to sort of bet on a much wider spectrum of tokens and sort of are taking bets on various sort of new things that are coming into the market. So we're seeing those sort of trends specifically in the younger sort of audience versus the older audience.
Right. Tanvi, when do you think we can expect some clarity in terms of policy, in terms of regulation? Do you think it will happen this year? It's been a long time coming. The budget finally showed some signs that, the government is at least talking about virtual digital assets and taxing them. But in terms of proper regulations, a law, when do you expect that? Tanvi, you're on mute.
Okay. Yeah, so you're asking from the Indian government, when can we expect that bill?
Yes.
Yeah, so I mean, I'm not sure if I can answer that question. I think the main, I think there is going to be a guidance from the tax department that should ideally be out in July sometime. I know they are working on it. That will possibly have, further rules or, more details on enforcement and things like that. In terms of the bill, I mean, honestly, if you look at it, I think when the crypto markets also, when they draw down a little bit, you typically see lesser policy focus on it, right? Because and I think after the tax rule, like now, it's just that the market has shrunk a little bit, right? So then again, that problem starts of getting priority for these issues from the government, right? So I'm not sure that in this monsoon session you'll see anything. Um, I mean, I think the tax rules will probably come in first, the tax guidances. And then I think probably towards the end of the year, you might see some more consultations and things happening, because I think there's a fair amount of consolidation now happening at a more global level, right? So I think India is just, is now another actor in that space. And I think you've seen from Prime Minister's earlier statements that he has already spoke about a global sort of approach. And I think now our coordination with other countries has also increased on these matters, right? So I think you will see some sort of yeah, being a part of maybe more global moves on this issue.
Got it. Got it. Sidharth, you made an interesting point in your previous answer on how, new investments are not coming in. It's a sad state of affairs. What's the way forward for really exchanges to continue operating sustainably? Because last year we saw a boom, right? We saw the emergence of two crypto unicorns, Andreessen Horowitz making its debut in India, and Coinbase also announcing big plans. Do you think a consolidation is inevitable when it comes to crypto exchanges in India with new money coming in? What's the way forward you see?
Well, we should. I mean, the situation is likely to remain the same until and unless the government intervenes and makes the tax laws and the environment. I mean, it's not just the tax, even the banking support to the exchanges. I mean, Gaurav and Darshan would know it better, but I've heard that the banking support, the UPI thing, it's all a mess. I mean, if I want to write crypto in my memorandum of association or article of association, I'll probably not get my company registered. I faced this in 2017 when we were trying to register a company. We were writing that crypto portfolio management and stuff like that. It did not go through, and it is the same. Most of the companies running as exchanges in India are writing it as technology companies, right? They are not writing themselves as crypto companies. This has to change. Once that changes, the entire ecosystem environment would change. So I
Right.
think
I just want to bring in Gaurav and Darshan here. Why are crypto companies not being transparent enough about what they are? Why are they passing them off as technology companies?
We would love to be as transparent as possible as long as it doesn't hinder operating in itself, right? So we did try registering it as a crypto company, but the MCO is not ready to even grant us that approval in terms of even the name. Like, we wanted to have a Bitcoin name in our sort of company name, and that was not allowed. So those are all the issues that you sort of frequently see. Even in banking, that is sort of an issue. If you had a sort of a Bitcoin name in your company name, you would not get a bank account. All those sort of issues keep coming. In terms of consolidation, what you would sort of typically see is when you sort of see a sector heating up, there are usually a lot of other participants that kind of keep coming in, right? So we saw that in 2014-15 in food tech. You had like 100 plus companies in food tech, and we saw that in like every different space except for crypto. In crypto, you didn't see a lot of exchanges or other sort of crypto buying and selling companies that were coming in, even when, say, the Supreme Court clarity sort of came in, right? You had the same sort of exchanges that survived over the last 2-3 years, like Bitbns, Vauld was there, Wazirex was there, and the same sort of exchanges continued over time, because operating sort of an exchange is a fairly sort of complicated exercise. And the second thing is, you'll have to deal with all sort of different issues that kind of keep coming in, which makes it harder to operate on a day-to-day basis as well.
Right.
So we've
Darshan?
not seen a lot of fintechs actually operating or sort of actively getting into it. So likes of a Paytm Money or a Zerodha or others, they've been really, really clear that they don't want to enter crypto because of all the complexities and what they might have to forego if they sort of get into the other side of the spectrum.
Yeah, actually, we've asked
Yeah.
Zerodha in the past if they want to get into cryptos. I think, they've cited lack of regulatory uncertainty. I think that's the major kind of red flag for them. Darshan, if you want to quickly weigh in before I can go to Kashif.
Yeah, I find it slightly insulting to insinuate that crypto companies are not trying to be compliant. It's quite the opposite. if you look at the amount of investment per dollar revenue generated from crypto businesses, I know for a fact that I'm very aware of Bitbns's operations, WazirX's operations, CoinDCS's operations, CoinSwitch's operations. We're trying to go out of our way to be compliant, but in the lack of compliance requirements or guidance, what can we do? And with regards to banking support, I know the bankers want to work with us. So why is it that the crypto space does not have banking support? Maybe we should ask the people in charge. But with regards to an effort, it takes two hands to make to shake hands, and we've definitely extended ours. And it's about time that regulators acknowledge that it's institutionalized. The asset class is not going anywhere. And if we take a hard position on crypto, the customers suffer because we're missing out on the potential upsides of the asset. We're missing out on potential upsides of the technology, and they're not really squishing the interest. That's not going to happen. If people will move out of India. We've historically been a victim of brain drain to the US. We risk that happening all over again in the 21st century because of more friendly jurisdictions such as Dubai and Singapore. So we have to really think about whether we want to capture the economic upside of everything happening in crypto, and if yes, come out with positive regulation.
Right. I mean, brain drain 2.0, I think, is already happening, Darshan. A lot of people setting up shop in Dubai and Singapore and, other such countries. But Kashif, if I can, ask you from an investor perspective, what lessons will this crash have for new investors? Because, some of them have never seen a bear market since they started investing.
Yeah. I'm actually more worried about them, and I'm quite vocal when it comes to this. First of all, everybody needs to acknowledge that whosoever is entering into this space is quite risky. The risks are real. And if you land up in a project that is, and if you don't have an understanding of it, you are going to put yourself in a lot of trouble. So I give you a very interesting perspective to it. I recently conducted a poll on Twitter that did you had an exposure to Luna? And on crypto Twitter, close to 46% people said that they had an exposure to Luna. So people who are there on Twitter, especially in crypto, they said 46% had an exposure to Luna. But trust me, what Luna does and what is the algorithmic stable coin, I am 110% sure that not more than 1 to 2% will have a proper understanding of how algorithmic stablecoin works. So what is happening, Chandra, right now, as the technology is evolving, Web3 is evolving, a lot of experiments are also evolving. It is humanly not possible to keep yourself updated with all the developments. And the space is growing at a supersonic speed, but the education is not growing in respect to that. And I'm sure exchanges are playing an amazing role. Gaurav, Darshan, Initial, everybody's trying their best. But as the space is evolving at a supersonic speed, the education is not evolving. And that's the reason whenever people they enter into this space, they enter with a speculative mindset. That's fair. At the end of the day, we are all here to make money. But the problem is when they try and invest their entire net worth into one or two experiments. In this case, it was Luna, and some people they invest in Shiba Inu, some invest in Doge, some invest in all different kind of coins. I'm not saying that all these coins that I named are going to be successful, or they are going to fall out, or they are going to vanish. I really don't know. But one thing is for sure that after 5 years or 4 years, you are not going to see all those projects that you see today. So one thing has to be told to the investor, and close to 1400 people are listening right now, are watching this video. I want to just tell them that before you enter into this market, you need to figure out that are you entering here for a store of value, where you want your funds to be secure and grow over the period of time, or you are entering with a speculative mindset, with the quick money making kind of a mindset. So you need to answer your question, and you need to just sit and relax that what you really want to achieve in crypto. So many people think that Bitcoin has gone out of hand. Now I need to figure out the new Bitcoin, the new Bitcoin that can help me get retired in 5 years. That is not going to be happening very soon. This space is very risky, and I think education initiatives, more education initiative needed in this space. Otherwise, what will happen? As more people they lose money in incidents like this, regulation will have the reasons. Regulator will get a valid reason, and they'll come up with narrative of banning this industry, or prohibiting this industry, and saying that okay, there are not enough initiatives taken in this space, and people are vulnerable in this market.
Right. Thank you for that, Kashif. I think Tanvi has to leave us now. Thank you, Tanvi, for joining us on the discussion. But Kashif, let me come back to you. You know, we had done a story yesterday about a 21-year-old who borrowed 2.5 lakh from his parents, and then he invested this money in cryptos. I think he also had an exposure to Luna, and now the worth of that investment is down by three-fourths. I think he's left with some 56,000 rupees worth of tokens. So, what would your advice be to Gen Zs, to first time investors who are borrowing to invest in this asset class, which they may not even understand at the end of the day? And it's not just them. I mean, this algorithmic, formula that Luna had or Terra had, many people didn't get. So, what would your advice be to first time investors?
Even I took a little while. Even the best of engineering degrees, Gaurav is an engineer, right? I'm sure Gaurav, as an engineer also, you take a lot, quite a lot of effort to understand these technologies. When you go through the white papers, it goes out of your, on top of
No,
your head.
I mean, even Charlie Munjar and Prematsa are saying, we don't get it, so we
Yeah,
don't put
yeah,
money and all.
yeah. And how many people they really understand the Bitcoin white paper, to be honest, and so proof of work. It's a consensus mechanism. Not many people today understand that, and that's the problem. Uh, you know, the example that you had given of that's quite unfortunate. In fact, I started my career in crypto by taking a loan only, right? And I lost money. I invested in a Ponzi scheme, and from there I started my journey. So I understand that how painful it is to lose your money, and more than that, how painful it is to take a personal loan and then lose money. So that becomes like a really painful this thing. I can still laugh on it, but that time in 2016-17 was very painful, and from there I got the motivation to enter into this space. And okay, I'll say, okay, let's do something in the education space. For all those youngsters, first of all, never take a loan. Even if today you feel that the markets are down, you're not a Michael Saylor that you can just go to the bank, take a loan, and just put in your money into this space. What happens, suppose I just give you an example. What happens today, tomorrow, that if you took a loan and you invested in a coin, and tomorrow your account got hacked, your wallet got hacked, suppose, or the exchange where you had kept your tokens vanished, or just closed, or it got hacked, what will happen to that in that scenario? These bearish markets can stay for close to 6 months, 7 months, 8 months, in fact maybe in a year. What will happen to your EMIs? Today, Bitcoin has taken a correction of more than 50% from its all-time high. Altcoins have taken a correction of more than 80%, 70%, and I'm talking about Solanas and Cardanos and the reputed ones, right? So this market is very unpredictable. Do not ever take a loan and enter into this market. Do not fall into this greed. Do not fall into this narrative of quick rich scheme. This is not a quick rich scheme. Still you want to speculate, still you want to take risk. Always allocate a very smaller portion of your portfolio. Never ever, if you have suppose 100 rupees, you should never put 100 rupees in experiments, in risky bets. I'll give this analogy of, suppose if you're having 100 rupees and you enter into a stock market, you will not put your 100 rupees in Ruchi Masala, right? Or Ramesh Hawai Chappal. If you have 100 rupees, you will rather invest 80 rupees in Reliance or Tata's or Maruti Suzuki. When you have this mindset in stocks, what happens to you when you enter in crypto? This is again a different behavioral mindset that we have seen, that this same guy has a different mindset when he invests in crypto, in stocks, and a different mindset when he invests in crypto. And I think here, once again, education will play an important role. And I'm sure as the market matures, as the market grows, and with the help of exchanges founders, I'm sure education initiatives like every exchange is following, trying their best. Things will fall in place in future.
Yeah, and hopefully Elon Musk
Uh,
doesn't promote meme coins, so that'll
yeah,
also help.
this was the
But
audience base that I was talking about, Chandra. Like when I mentioned, like we are seeing a different pattern in Gen Z in terms of investing confidence or the way they sort of look at investment. So they're fine taking like borrowing money and investing versus sort of the millennials. Like that difference is definitely out there.
so Gen Zs are they're ready to kind of take that risk on someone
Yeah.
else's money.
Yeah, so like Gen Zs are even more comfortable like dropping out of their college. So that brash confidence is like across the board. It's not just with respect to investing. It is also sort of following your passion,
Yeah,
dropping
but
out
do
of
it with the
college.
money you earn, not on borrowed savings of your parents.
But
That's what
but
I
Chandra,
don't get.
what is happening? These loans are getting very accessible. All these applications like Navi and all these applications where you can just get loan with a click of your buttons. Like, I mean, 5 minutes get approve, you get an approval. I think that has also motivated a lot of youngsters to actually take a loan and then invest in crypto on the same day, and not just crypto, stocks also. Youngsters are taking loans and investing in stocks as well.
Right. Darshan, prior to the crash, a lot of exchanges had plans to double down on India, also international expansion. What does the crash say to these plans? How will this change going forward? Coinbase has, for example, already said that it is, going to scale down hiring. But what about the others?
So, with regards to the broader sentiment, I think anybody who is at a growth stage firm has to clearly look at profitability, has to look at what kind of runway they have, and they need to be very deliberate on how they're managing their cash flow so that they see the light at the end of the bear market, irrespective of how long that may be. So, if the bear market lasts 6 months, I presume there's not going to be so much blood on the streets. But what if this bear market is as long as crypto winter of 2018 and 2019? And if that is the case, companies are going to need to play this conservatively, and that probably means spending less on marketing, which I think is good. Spending more around product innovation so that you can capitalize on the next wave of adoption, and be very deliberate on the stuffing that you end up doing. Vault included in that. Now we have not raised over the last 3 months. I think the companies who raised in Q1 of 2022 or Q4 of 2021 were very fortunate to be able to time this, so they don't have to dial down quite like some of the others. But given that we live in a different market than 3 months ago, we're going to need to play the our cash position close to our heart, and be very deliberate around how we spend. What this also means is growth stage companies may not get access to capital quite like they used to, because we've seen a lot of growth funds reach and see either realized or unrealized losses in fairly large amounts. So I don't see early stage companies being impacted too much, but it's just the companies who are at the maybe 100 to 120 employee to maybe 2,000 employee range. Those companies are really going to have to uh, focus on their unit economics, focus on their payback period on marketing campaigns, focus on the efficiency of dollars spent on the team building side. If I were a betting man, I think Coinbase, in the absence of this uh, aggressive bear market, would have bought one of the leading crypto exchanges. And I think if the price is right, they may still go ahead and do so. So I expect some consolidation over the next 12 months.
Yeah, interestingly, I think Coinbase is already an investor in one or two of these exchanges.
Try
But
three.
three, three.
Yeah.
But Coinbase has its own kind of headaches with the RBI, so we'll have to wait and see how that pans out.
It's not
But
just Coinbase. just so you know.
But they were vocal about it, right? I mean, the others were, hush hush. They were trying to solve it quietly. Coinbase went all out. We'll have
I
to.
think it's important to know
I'm not
one
sure
thing.
that's going to go down well.
So maybe we should look at what the law is and work backwards from there. The law is pretty clear on this. Crypto, it was unconstitutional to ban crypto companies from banking. That was clearly determined by the Supreme Court. There's no subjectivity around that. And this was just 2 years ago. If that is the case, which it is, why is it that UPI, which is a central bank owned instrument, not accessible to crypto companies? Is there anything legally stopping that from being the case? If yes, great. The crypto space would like to see
Darshan, the
that.
thing that's
If
stopping
not,
them is there's no law in place. How is NPCI going to allow this without a law in place? I think it comes down to that.
I don't buy that argument at all. And let me tell you why. Before 2016, Paytm was unregulated, before the PPI laws came out. Does that mean they didn't have access to banking? Were they breaking the law because they were unregulated? Of course not, right? They were innovating on behalf of customers to ensure that peer-to-peer payments was easy to do. And I'm not sure whether you know this, but there's not a single payment gateway approved in India. So Razorpay is technically unregulated. So are they breaking the law? No, right? They're creating value for small and medium businesses to get access to banking, to get access to capturing payments for their business, and they're creating tremendous value. Unregulated does not mean illegal, and banking has historically always supported high growth, innovative companies. This is not the norm. Let's not take that as such. This is the exception.
Okay.
And I'm not going to sit quiet about
that. Okay, Darshan. Noted. Hopefully there will be some breakthrough on this, but we are coming to the last final minute, so I'll go to Sidharth. Sidharth, give us a sense. Sorry, you wanted to say some background sound noise. Yeah, Sidharth, actually, I wanted to get your thoughts on something else that Darshan said, that, if you go on having such adverse regulations, such adverse taxes, total uncertainty, the brain drain is just going to continue. Brain drain 1.0 India has seen, and now we're going to brace for brain drain 2.2. Is that going to be the biggest outcome of all this? We are already seeing this happening with many companies moving to Dubai, Singapore, other jurisdictions which are more friendly. Will India again become just a back office where programmers work for companies that will then be based in other countries?
Well, that's definitely going to continue. See, brain drain, we have seen it in the early 90s during the internet era. People were moving to the US because India did not have the Information Technology Act till 2000, I guess, right? So for the first few years, the customs did not know what is going out in a CD, which the tech giants today they were sending out, a CD with software. They did not know the concept of software. Information Technology Act came in 2000. It got an update in 2015, and it is still. I mean, it's just. With all due respect, it's not updated the way other countries have updated their IT acts, right? They have no definitions for a lot of things, including cloud, right? So they have very limited explanations of cloud and storage and data sets and stuff like that. So this has to change because if the regulations don't come in time, what like the crypto space, we don't know how to go ahead and thrive in this market in spite of being the capacity to be at the forefront of this entire ecosystem. Like if you give a open hand to India, I think we are ahead of everybody in terms of market size, in terms of investment capabilities, in terms of the tech power. It's superb, right? But because there is ambiguity, the companies are going out, followed by the entrepreneurs and the developers as well. So in the crypto space, the developers are highly paid. That's because uh, There are very few companies in the crypto space and very few developers as well. So it's really difficult to hold on to talent in this space. Now, a developer in India, if he's getting paid $1,000, if he moves to Dubai or Singapore, he may get paid $5,000. So he is not stupid. He will go out of the country and relocate himself and work for the same company, in fact. But it's better that he moves out to get paid more. But here, like I was just looking at jurisdictions. Dubai has something called as golden visa. So
Yeah,
golden
they have a
visa,
golden visa, yeah.
the, so the
Kashif was there
entire
recently.
concept
He'll know
of
about.
I am in Dubai right now.
Okay.
But see, the point is the idea of golden visa is to hold on to talent, because for any country to grow, talent, human resource is the biggest capital. The idea why they came out with the golden visa category for the skilled, not for the investors, right? For the investors, definitely they'll get a golden visa. But if you are talented, you are an entrepreneur of a special class, if you are smart enough, if you are highly qualified, you are eligible for a golden visa. And because they want all these guys to come here, start their companies so that the country can survive. India, I think, has no respect for talent in that way. They are not doing anything for the skilled of I mean they know that these guys are going to go out, earn money and send it back in their NREs accounts, but that's not the way. This has to change.
And when
uh,
they
it's not just the NRE account, even the investment. All these companies in the crypto space, they have a dual corporate structure, right? So if say somebody says that we've got funded, mostly the funds are being routed through some third some holding company. This has to change. The headquarter of that company has to be in India. It should not be somewhere else in Singapore or Cayman Islands or Dubai or something like that. So that is when that will happen only and only when the regulations are in support of the it should embrace the entire thing, right? The talent as well as the technology.
Right. We're coming towards the end of the show, so I'm just going to get quick closing comments from all of you. Uh, since we started with a crypto crash, if you were a betting man, till when do you see this lasting? When do you see a recovery? Darshan, maybe you can go first. What's your prediction?
So I think if I look at the previous drawdown, which was really after the exuberance of 2017, the bear market, which was called crypto winter in hindsight, lasted about 18 months, and we saw Bitcoin drop 80%. We saw Ethereum drop 90% from its all-time high, and we saw many altcoins not even return to their all-time high post the new bull run. So I I have. Uh, the optimist in me would like to think that it's 6 months, but the bear market would last 6 months. But I realistically think it's going to last between 12 to 18 months, especially because with reverse QE, the Fed has not yet started pulling liquidity out. It's just the market trying to price in what that would mean. And I think the effects of liquidity leaving the market are going to be really felt by growth stage companies, by the crypto space, by public companies that are again forward thinking, and the market's going to reward cash flow positive businesses. They're going to reward profitable businesses, and the crypto space is and along with other growth stage assets are going to enter a minimum 12-month bear cycle, but could be between 12 to 18 months.
Wow, 12 to 18 months. That's going to be harsh. Gaurav, your prediction? Gaurav, you're on mute.
So, from an Indian investor standpoint, especially with crypto, of course, the bear market would be there. Prices might drop further. But from the clarity and taxation standpoint, I think we are already at the rock bottom. So, things should sort of improve from here.
Things can only go up from here.
Yeah, so that would be an optimistic take on that. Prices might go downwards. So if you're investing, invest in the best sort of assets like a Bitcoin and Ethereum, not on the longer
Yeah,
tail
like
assets
Kashif
and
gave
do an
the
SIP.
Reliance and Tata analogy.
Right.
Yeah. Um, Sidharth, your prediction?
Well, that's a tough one, but I think next 3 to 6 months we are going sideways. The next bull market, technically looking at the history of bitcoins, I think should start in the last few months of 2022 and 2023 first quarter. That's when the bull cycle will start. 2023 second half is when we can see an all-time high of bitcoin once again, and probably crossing 100K. We did not hit the 100K benchmark in the last round, so I'm optimistic that 100K should happen.
Kashif?
Yeah. So generally, I refrain myself from predicting markets, because you really can't predict these markets. When somebody asks me, how do you see this market evolving over the period of time, I always say that challenges are real, and in near future, what you'll see, that regulations are going to come on stable coins. And once say stable coins are going to be under pressure, you will see that will have a direct impact on the market. You'll also see, regulations coming in DeFi space as well, right? And if the regulatory pressure is on DeFi, if the regulatory pressure on stablecoin increases, in the coming few months, I think the worst is yet to come. Number one, liquidity is definitely going out of the market, and that will definitely have an impact. Number three, inflation. Inflation is going to increase. It's not going down anytime sooner, and we are seeing that numbers are coming around the world, including Asia as well. So I think all these things, they give me a signal, a feeling that this bear market is going to stay for few months now. And I think in coming days, it's going to be more challenging, and some real threatening is going to come from the regulatory perspective on stable coins and DeFi.
Right. So brace yourselves because we are in for a crypto winter, at least, for the forthcoming future. But on that note, Darshan, I think Darshan's dropped off. Darshan, Sidharth, Gaurav, and Kashif, and Tanvi as well, who was earlier on the show. Thank you all very much for joining us on Money Control Masterclass and sharing your perspective on why the crash, and more importantly, what's next for cryptocurrencies in it.
Thanks for having us.
Thank you.